Hello everyone. Today we are going to discuss about the candles, that what are candles and how candles are formed. So as shown in TradingView, as we discussed, that is a platform which is representation of market, that these all are candles and each and every candle has a meaning here. So first let's do the anatomy of the candle, and then we will understand in upcoming lectures that what does each candle mean. So as shown here, that these are like two types of candle. The one is bullish candle, the other is bearish candle. So the green one are called basically bullish candles. In bullish candles, the market is basically moving up. Means that buyers are in, there is a demand, and market is moving up. In bearish candle, it means that sellers are in control. There is a supply, and sellers are selling the coin, and that's why the price is moving down. So this is a bearish candle. Now each candle has four things. One is its high, other is its close, then open, and then low. So the green candles start from the bottom, from here. Like just suppose that the market was at 100 at the start of the hour. Then sellers step in and they try to move the market down like this. So maybe market moves at 90, then buyers step in again and they uh, try to push the market up. So like as you can see, the market moves up till here, it's a high, and then again seller step in, and then market move bit down, and then you can see the market is closed. So this is a green candle. Like this is the logic behind the formation of candle. Now let's discuss the bearish candle. So in bearish candle, it start from the top as shown. Now just suppose that market was maybe at 110, and then first of all maybe some buyers came in, they tried to move the price up, and then sellers came in and then they start selling the coin, and then market moved down, then again buyer came in, and then market closed here. So we would know that at the end, like the buyers came in and as shown that this is a wick, this is called a wick, and market is closed here. So this is a bearish candle. Now we can see it practically, that here you can see that this is a bearish candle, and it started from here, and then sellers came in and they bring the market till here, then again buyers came in, then they close it here. So now there are different time frames of each candle. Like there are like 1 minute candle, 5 minute candle, 1 hour, 1 day. There are a lot of time frames. Even there's a 1 week, 1 month candle also, as shown. Even 12 months candle. So each candle has like its own significance. Like bigger the time frame, the bigger their relevance is. So in 1 day candle, it's basically the 24-hour candle, and it shows the movement of the market in within the whole day. Like as shown that the market started from here, it will go till here, then here, and then it closed at here. So this is all about the candles. Then we will be discussing in the upcoming lectures about the psychology of candle, like what's the meaning behind the each candle. And last but not the least, that one thing I just wanted to mention, that these are called the wick, the shadow, as shown that these are the wick. So thank you so much for watching, and let's meet in the next video.